Welcome, everyone. This is another episode that we are recording for the community in the RV mobile home park investment. This time, I have a good friend of mine, Dr. Ivan. He's been my bank for about 5 years. When I was doing single family homes, we have been building a relationship, and like I said, he's a good banker. He's a human approach. He's not the like the other banks. Okay, so I want to introduce Shane as my partner also in this project. We are developing mobile homes and RV parks and tiny home communities, and at some point people will run out of money and they can reach out to Dr. Ivan. Dr. Ivan has been doing buying and sell notes. So he's been in the note investment for a while, and he's a very knowledgeable person that you can reach out to and get all the questions answers. So with that, please, Shane, ask some questions so we can get to know Dr. Ivan a lot better.
Sure. It's great to see you again and meet you again. I was just curious if you could explain to me sort of what is a mortgage note?
Well, the simplest terms, a mortgage note is a promise to pay a debt. And the mortgage note is backed by a hard asset, which is in our case, a house. And any hard asset could be a house, a multifamily house, it could be an apartment building, it could be a business, it could be an industrial building, it also could be a mobile home park. Mm-hmm. What the mortgage does, it gives the bank the ability to repossess the property if the owner does not pay.
Okay. Now, how does the actual note investing work from an investor perspective?
From an investor perspective, think of it this way. Let me give you an example. Have you ever had a debt on a car, taken out a loan for a car?
Sure.
Have you ever had a credit card?
Sure.
Have you had a home mortgage?
I haven't myself, but but yes, I understand what you mean. Yes,
I have.
So those are examples of being in the note business.
Yep.
But that's being on the wrong side of the note business because you're paying money to use a property.
Mm-hmm.
There's one part of the note business that people use all the time, and it's very popular in the United States, which is credit cards. Mm-hmm. Credit cards is basically a bank extending their credit to you so you can use their money. You use their money to purchase a computer. You put it on a credit card, and the credit card company expects you to pay it in full at the end of the month or at the end of the billing period. What happens when you don't pay it off at the end of the month? They charge interest. So that's where the banks make money. The same thing in the mortgage business. You have a promise to pay an obligation in the future. In the United States, it's usually is a 30-year mortgage, which extends the payment period for 30 years, and it gives you enough time to pay. Again, if you do not pay that mortgage on time, what happens? The bank levies you a fine.
Okay, gotcha. Now, is there any real risk involved with investing with mortgage notes?
Of course, every investment has its risks. There is no risk-free investment. But in mortgage investing, just think of it this way, the same example with the house. If you don't pay your bill on time, if you're 90 days late, what happens? You get a notice in the bank saying that your account is in arrears, and the bank will take steps to repossess the house from you. Just like you won't pay your car note on time, the institution that lend you that money will repossess the car. So in note investing, we have the same risks. Mm-hmm. The borrower cannot pay or will not pay, and then what happens? We take the property back. So there are 3 outcomes that can happen in note investing. The first one is that the borrower pays on time. Mm-hmm. The second outcome is that the borrower pays ahead of time or pays off the loan early. The third option is that they don't pay at all. So what happens is in all those scenarios, you have a different rate of return in all those scenarios. So
Interesting.
imagine if you didn't pay the house on time, if you didn't pay the house, what would happen? You would lose all those payments that you made previously, and the money keeps that bank. The money keeps that money.
Mhm.
The bank keeps the money. I'm sorry.
Oh, okay. Gotcha. Now, how would you perform your due diligence to ensure that you have a good, I don't want to say client, but a good individual you're working
Borrower.
borrower, sorry, that's the term I'm thinking of, for prior to purchasing a mortgage note.
So just like a bank will vet you when they're extending a mortgage or a credit to you, just like a credit card, we do background checks.
Okay.
We do ask for employment history. We ask for references. And that's how we vet our borrowers. Also, when we're writing a mortgage, we ask for a certain amount of down payment to make sure that they have what we call skin in the game.
Mhm.
Just like when you buy a house,
Sure,
the
sure.
bank requires you 20% down, correct?
Yep, right.
It serves as a incentive for you to keep paying.
Right. No, totally. It's a okay.
So I'll give you an example. The first note that I wrote was a small business owner that my brother referred me.
Mhm.
My brother's an accountant, and he did his taxes.
Yep.
Since this was a cash business in the 90s,
Sure.
he had a hard time finding money. So my brother had vetted this person because he knew his business and he had done his taxes for 5 years.
Mhm.
So I extended some credit to him, and I had the business as a backup.
Mhm.
So once he paid me off, I established a history with him. And that led me, actually, he referred me to another person, and that helped me grow my business. So more than anything, we're in the money business, but really we are in the people business.
Yep. That's awesome. Interesting. And speaking of vetting and whatnot, and in a similar topic, is there a lot of regulations or sort of legalities you have to follow or consult with anyone on? Hmm,
There are rules that you have to follow,
sure.
and everything is state specific. There are certain states, if you originate more than X amount of loans, you have to have a title, meaning you have to be a registered loan originator. And one
Sure.
of those states is Georgia.
Oh, okay.
But most of the states, basically, these laws fall under personal credit.
Hmm.
And again, this is a relationship business. Most of my business that I do now is because of prior business that I've done with other clients.
Sure. Interesting. Okay. Would you say it's a big time commitment or is it depend on how much effort you put in or?
So what really got me interested in this business is that one year I was doing a fix and flip.
Mhm.
And the fix and flip was supposed to take 3 months and extended to 6 months with cost overruns.
Right.
And at the end of the year, I had calculated how much time it took me to vet the contractor,
Mhm.
to make sure that the contractor was doing all the work that he said he was going to do,
Right.
and compare the amount of time and effort that I took in uh, registering the note and following up with the note with this note business. It just blew me away. I spent maybe an hour a month
Wow.
with my note business as compared to I forgot how many hours it took me to talk with the contractor, talk with the subcontractor to make sure that they were doing their work.
Right. Right. Oh, that's crazy. Huh. Now,
So
would you say,
you,
oh, go on.
go ahead, and you add to the fact that since I was previously a landlord, I didn't have to deal with the T's, which
Right.
is the tenants, the toilets, the termites.
Yeah, it's in Florida, right? Yeah.
Yes.
With the crazy economy and mortgage rates and everything else right now, is it still a good time for this business, would you say, or has it changed much?
So let me give you an example. When the mortgages in years past were at less than 3%,
Mhm.
I wrote a note for a property at 9.5%.
Wow.
Because most of my referrals are people that have businesses, basically cash businesses, and don't qualify for conventional mortgages.
Mm-hmm. Okay. My next question was going to be, can you negotiate the terms of a mortgage? It sounds like you can.
Everything is negotiable. Okay, everything is negotiable. You can negotiate the terms of the loan.
Mhm.
You can negotiate the interest. You can negotiate the fees.
Interesting. Okay. What would
And
you
before you
say?
sign on the dotted line, you have to make sure everything is all your T's are crossed and your I's are dotted.
Right. No, definitely. What would you say is the best way for once someone is in the business to really scale as far as expanding, as far as growing their business, if that makes sense?
Again, it's what made my business grow was word of mouth.
Okay.
I was actually referred to Diego from a partner of mine in another venture, and I had to vet Diego before I actually extended him credit.
Sure.
And since that note with Diego was successful, he referred other business to me.
That's awesome. Okay. Interesting. Huh. That is pretty interesting. Wow. Okay. And oh, go ahead. Go ahead.
And if you think of it this way, at that time when banks were offering less than 1% of interest,
Mhm.
I was making on the average of 8% on my money.
Wow. Wow. Okay. Are there a lot of, this is almost a formal and informal question. Are there a lot of mortgage note investors out there? Is there like associations? Or is it more informal or?
As compared to regular real estate, fix and flip, wholesalers, there is a very small industry,
Sure.
and I guess people know each other.
Mm-hmm.
And there is one association. It's under the umbrella of the Association of Private Lenders.
Okay.
And that's basically what you are. You are a private lender.
Sure.
Mhm.
Okay. Interesting.
There is no obligation to become part of it, but it actually helps the industry because it helps you with terms and referrals and rules and regulations.
That's awesome. Okay. Cool. I think those are all the questions I have. I really do appreciate your time. It's a very interesting industry, and I think that people really can learn and grow from it. And I think it's certainly a very interesting field, if you will. But I do appreciate your time, definitely.
Yes, if you have any questions, you can email me the questions at I have a website, it's called www.thenotedoctor.com, and you can email me at info@thenotedoctor.com.
Okay, we'll definitely share it in the bottom of our video as well. Definitely. All right. Well, I do
Thank you,
appreciate
Shane, and thank you, Dr. Ivan, for joining us tonight. For our community in the wholesaling of RVs, mobile homes, and tiny homes, we want you to remember to click on the bottom and download the free ebook so you can get started on this business, and we will be here for you to help you out.
Absolutely.
Great.
All righty. Well, thank you again. I appreciate it.
Thank you.
Thanks.